Hello, everyone, and welcome to where we keep all of your accounts in balance. Today, we will be discussing the most fundamental account in accounting, and that is the T account, so called because of its T-like structure that you see on the screen. Now, this T-like structure represents two columns, the left-hand column being debits and the right-hand column being credits. Now, no matter what you are tracking in this account, the left-hand side will always be the debits and the right-hand side will always be the credits. This is why you may hear people refer to a debit as the left account and the credit as the right account or the right-hand side. Now, we will also often put the name of the account that we are working on, and today's example will focus on a checking account. Now, a checking is a form of cash account or an asset account. And that means that when we are adding money to the account, it will go into the debit column because an asset account, such as checking, will always increase with debits and decrease with credits. Now, the inverse of that would be something like a loan, which would increase with credits and decrease with debits. But for today's example, we will focus on a checking account. So let's start by opening a small business. And the first thing we do in this business is deposit $500 into our checking account. Now, the second transaction we do is to drive down the road and purchase $50 worth of office supplies. Now, we have enough office supplies to get us through the week, but at the end of the week, we need some more supplies, so we drive down and we purchase an additional $20 in office supplies. Now we do some of our business, we land our first client, and they pay us a deposit of $400. And to fulfill our agreement with that client, we go out and we purchase $130 worth of equipment. Now, these 5 transactions will all add up, and you will notice that we put our credits into parentheses. This is because on a T-sheet, you will never see a minus sign, such as labeling this minus $50. It will always be displayed either in parentheses, like such, or just plain without the parentheses. So, we have completed these 5 transactions, and now we want to know what this current balance of our checking account is. So, we will close out this T-sheet. We'll mark that off, and we will see right here that our total number of debits is 900 and our total number of credits is 200. So the current balance is going to be 900 minus 200, which is going to give us a balance of $700. So we can look at this and know that we have $500 investment from the owner and $400 in revenue from our first client, giving us $900 into the account in cash. Then we have spent $70 with these 2 transactions on office supplies and $130 on equipment necessary to complete our agreement, which nets $200 in expenses or credits to the account, which brings our balance to $700. Now, let's look at something a little bit longer. Let's say that we've continued on and we have landed another client who has only paid us $150. And to complete our agreement with them, we have to pay $20 worth of fees. And we continue on for another week and we land 2 more clients. The first one pays us $300, and the same day, another client pays us $800. Now, you will notice that both of those transactions are separately listed in the debits column. This is because we individually record every transaction that occurs. So even if we deposited those 2 checks at the same time, we would record those as separate transactions. Now, some of you who may have done some more accounting before may know that you can sum these 2 up. But for now, we are going to cover them as completely separate until we get into more advanced principles of being able to track where all of that money has come from and be able to list that one transaction, but have a total transaction of that 1,100, but really show that it's these 2 separately. So now we will come down here and we will have to spend $500 to complete one of those agreements, and we will have to spend $1,700 to complete the other agreement. Now, we know from looking at this that we may have lost money, but we need to know where our business stands in those terms to figure out what it is that we are doing in terms of actually making money. So we'll start by adding up our left column. So that's 500, 900, 1,050, 1,350, $2,150. And then we will add up on the other side. Let's go bottom to top. So that's 1,700. And then that is 2,200, 2,220, 2,350, 2,400, and 2,420. Now we see that we have actually run this account into a negative. So we will see that this is 2,420. So we have now overdrafted our checking account. And we are at a loss of 2,420. That would be, so 2,150, 2,250, 2,350. So that will be $270 that our account is currently overdrafted at the bank. So we can look at this and go, oh boy, we're in trouble. We not only didn't make money, but we lost money completing that work. And we never obviously want to see that. So we're going to reach out to our customer and we're going to go, hey, it turns out we messed up on that agreement. And actually, we need you to pay the correct amount for what's happened, what the work that we are going to do. So we're going to reach out, say that, and like, oh, okay, they're not too happy, but they'll pay the rest of their bill. And the client who paid $300 will actually end up paying $800, bringing us $500 more. And the client who paid $800 will pay $1,100. And so now that we've charged our correct amounts, we can come into here and we can see the current balance of our account. So we have 1,100, 1,600, and we have 16 plus 8. Well, let's just add all of these up. So we'll sum And then we will sum these as well. So let's just take these, sum. That's not going to add, so let's add these together manually. So that's going to be 1,700, that's going to be 2,200, 2,300, 50, 2,400, and $20. So we will see that we have now gone from previously having a balance on our account of a negative to 2,400. So it's going to be $1,330. So now we have in fact made money in this endeavor. Now this is just the basics of doing something simple like your checking account. In the future, we will go through and do something more advanced like doing our credit-based accounts, as well as doing more of our primary accounts, such as balancing between two sets, such as when we paid for these different items, where it is that that other amount goes to, because we've spent money, so there must be money somewhere else in our total accounting. So check back in and we will continue going over some of the fundamentals of accounting.